Welcome back, smart traders. In this video, we're diving deep into one of the most powerful price action tools, triple candlestick patterns. Triple candlestick patterns are powerful three-bar formations that reveal strong shifts in market momentum. In this video, we'll break down how these patterns work, what they tell us about market sentiment, and how to trade them with precision. I'll show you exact entry and exit techniques, as well as risk management strategies. So let's get into it. First triple candlestick pattern is the morning star, which is a bullish reversal pattern, and is composed of three candles. The first candle is a large bearish candlestick, reflecting strong selling pressure. The second candle is a small-bodied candle. It can be bullish or bearish, and often appears as a doji or a spinning top, indicating market indecision. The third candle is a strong bullish candlestick that closes well into the body of the first candle, confirming a shift in sentiment. Morning star typically appears at the bottom of a downtrend. It signals a potential shift from bearish momentum to bullish strength. To identify a valid morning star pattern, look for the pattern after a downtrend. The middle candle should ideally gap below the first and third candles. Volume may increase on the third candle, further validating the reversal. When these three elements come together, they form the morning star, a reliable signal that buyers are regaining control. Conversely, evening star is the bearish candlestick, which also consists of three candlesticks. The first candle is a large bullish candlestick, showing strong buying activity. The second candle is a small-bodied candle, reflecting market hesitation or indecision. It may appear as a doji or spinning top. The third candle is a strong bearish candlestick that closes deep into the body of the first candle, confirming that sellers have taken over. It appears at the top of an uptrend and warns of a potential trend reversal to the downside. To check the validity of an evening star pattern, look for the pattern after a sustained uptrend. The middle candle may gap above the first and third candles. A high-volume decline on the third candle adds confirmation. The evening star marks the weakening of bullish momentum and the rise of bearish control, a crucial warning for traders to prepare for a potential downtrend. Now let's take a look at a real market chart example of the evening star pattern. In this setup, you can see that a clear support and resistance zone has been established. Price pulls back to the resistance level, and at that zone, an evening star pattern forms, signaling potential bearish reversal. This gives us a high probability entry point for a short trade, as the pattern suggests the upward momentum is weakening. To manage risk, place your stop loss just above the high of the evening star formation, and aim for the next support zone as your take-profit target. Up next is the bullish abandoned baby, a rare yet powerful bullish reversal pattern. At first glance, it may appear similar to the morning star, but there are key differences. The middle candle will always be doji, which is completely isolated, meaning no overlap in wicks with the first or third candles. The pattern often occurs at or near key support zones. Confirmation is stronger when accompanied by higher volume on the third candle. Bullish abandoned baby appears at the end of a downtrend and indicates a potential reversal to the upside. When all three candles align with clear price gaps, the bullish abandoned baby suggests the selling pressure has been exhausted, and buyers are stepping in decisively. On the other hand, bearish abandoned baby, which looks similar to evening star, but there are some key differences. The middle candle will be doji, which is completely isolated, meaning no overlap in wicks with the first or third candles. Confirmation is stronger when accompanied by higher volume on the third candle. Bearish abandoned baby appears at the end of an uptrend and indicates a potential reversal to the downside. When all three candles align with clear price gaps, the bullish abandoned baby suggests the buying pressure is weakening, and sellers are entering to the market. Let's look at a real market chart example of the bullish abandoned baby pattern. In this scenario, the price is forming an ascending channel, indicating a bullish trend. We wait for the price to pull back to the lower trend line, where we then spot a bullish abandoned baby pattern forming. This setup signals a potential buying opportunity as the market shows signs of rejecting lower prices. To manage risk, place your stop loss just below the low of the doji candle, and set your take-profit target near the upper trend line of the channel. This combination of pattern recognition and market structure increases the probability of a successful trade. Our next pattern is known as the three white soldiers. This pattern consists of 3 consecutive bullish candles. All 3 candles have long real bodies with minimal upper wicks, showing sustained buying pressure. Each candle opens within or near the previous candle's body and closing progressively higher. The candles should ideally not show large gaps, showing steady upward progression. This pattern is a bullish reversal formation that typically appears at the end of a downtrend. It marks a shift in momentum as buyers take control and a new uptrend may be underway. On the other hand, the 3 black crows is the bearish counterpart to the 3 white soldiers. This pattern consists of 3 consecutive bearish candles. All 3 candles have long real bodies with little lower wicks. Each candle opens within or near the body of the previous candle, and closes below the previous candle close, showing sustained selling pressure. It forms at the top of an uptrend and signals that sellers are overpowering buyers, and that a potential trend reversal is underway. Let's take a look at a real market chart example of the 3 black crows pattern. In this setup, you'll notice that the price has been rejected multiple times from a downward trend line, indicating strong selling pressure. As the price retraces back to the trend line, a 3 black crows pattern forms. This presents a high probability sell opportunity, suggesting that the price may continue moving downward from this area. To manage your risk, place your stop loss just above the high of the pattern, and set your take-profit target near the next significant support zone. This kind of setup, combining candlestick confirmation with trendline resistance, can be a powerful addition to your trading strategy. Thanks for watching, and as always, trade smart, stay disciplined, and keep learning. If you learned something new today, don't forget to hit the like button, subscribe for more such strategies, and turn on notifications so you never miss an upload. See you in the next video.